Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 10:40 on Wall Street. We do check markets all day long here at Bloomberg. Fed day, and we have got stocks moving higher right now with the S&P 500 index just about the best level of the session, up 14 right now, 63.85. That is a gain of 0.2%. Traders gearing up for the Fed decision, 2 o'clock Wall Street time, driving bonds lower. Stocks holding near records as data shows the U.S. economy is holding up. Dollar up for a fifth straight day. The Dow right now up 73, up 0.2%. S&P also up 0.2%, while Nasdaq, the composite index, up 79, up 0.4%. Nasdaq 100 index up 0.3, and our Mag 7 index up by 0.3%. Two of the Mag 7, Microsoft and Meta, do report after the close of trading today. Microsoft right now up by 0.3%. We've got Meta Platforms also up by about 0.3%. The 10-year 4.36%, with the 2-year 3.90%. Gold down $22 the ounce, holding just above $3,300, down 0.6%, while West Texas Intermediate crude up 0.4%, $69.53 a barrel. Our special Fed coverage kicks off at 1:30 p.m. Wall Street time. The decision drops at 2 o'clock, as you well know. Jay Powell's news conference coming up 2:30 p.m. Wall Street time. As for what to expect, Dennis Lockhart is the former president of the Atlanta Fed. He was a guest moments ago right here on Bloomberg Intelligence.
I think it remains a well-performing economy. We're at close to full employment, and inflation has sort of stabilized above target, but nonetheless is not at extraordinary levels. It's a good economy. And does it need stimulus at this point? Cutting rates is stimulus.
Former Atlanta Fed President Dennis Lockhart, now CEO of Navigation Capital. Palo Alto Networks buying CyberArk software in a cash and stock deal valuing the Israeli cybersecurity company at about $25 billion. Cyber down 0.9%. Palo Alto Networks down now by 6.7%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, Charlie Pelleton, thank you so much. We appreciate that. John Tucker, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube. John, with all this inflation over the last several years, I found myself at the supermarket buying more store-branded products.
The white label stuff, right?
But yeah. I'll tell you what I haven't, is ketchup. I'm sticking with Heinz no matter what. I mean, that is ketchup to me. Ketchup, however you play it.
How does Jen say it?
I don't know. Jen Bartashis, she does this stuff for a living. She covers all the staples companies and packaged foods companies. She also covers all the supermarkets, too. So if you want to talk inflation on the stuff we buy at the store, Jen Bartashis is the person to talk to. She joins us from Princeton here. So, Jen, Kraft Heinz, they put out some numbers that show they still have some pricing power out there in the marketplace, don't they?
They do, Paul, and it was by all things considered, it was a pretty decent quarter for Kraft Heinz, but they're still in progress of trying to really turn around and accelerate parts of their business. And although ketchup is a brand where a lot of people have a lot of loyalty, there are a lot of other parts of their portfolio where they're still really trying to invest to regain consumer uptake of their products.
What's like a growth area for this business, like AI-powered mustard or?
Yeah, as funny as it sounds, one of the really interesting things about AI with regards to food companies is that it's really allowing an unlocking and an acceleration of innovation. And so although it's a little bit tongue-in-cheek, for Kraft Heinz, one of the big areas of focus for them is the flavors, and that's the sauces, because right now consumers like things, they like different taste experiences, and sauce is a very easy and economical way to do that. So they've been really pushing the accelerator in that area.
All right, you go to any restaurant, diner, USA, it's kind of at your booth would be ketchup, mustard, maybe that's basically it. Now, what's there? What's a staple? As much as ketchup is hot sauces.
Oh,
the
really?
Kids,
Yeah, okay.
The kids are doing the hot sauces. I don't get it. I mean, they're putting it on everything, and they got it at their desks at work. What is this? Jen, talk to us about this hot sauce thing. Where did that come from?
Well, there's a real generational shift in terms of flavor profiles that consumers like. And what we see is that in younger generations, Spicy, the balancing of sweet and spicy, or salty and sweet, those kind of those kind of dual type taste flavors are things that younger generation really are into. And they're backing that up with the way they're buying, whether it's how they're consuming it in restaurants or what they're buying when they are purchasing and things to make at home. And that's why you see other companies like McCormick really doubling down on spice and flavor. And the hot sauces are doing really well for them as well.
And in terms of moderating rate of inflation, well, I haven't seen it at the Food Town. I'm paying more for everything, including, seems, Heinz products. Am I right?
You are right in with regards to certain categories. I will say retailers are pretty good about trying to bring down prices where they can as quickly as they can, because they really are trying to get consumers to value them in terms of being a loyal, to be loyal to their retail operations. But inflation has been persistent, and commodity costs are down from previous highs, but they're still elevated relative to historic levels. That means that these companies, have absorbed a lot and don't have a lot of room to absorb more. So there is still some selective price increases that are going through. Tomatoes are a unique category because we're looking at prices going up for tomatoes through the end of the year because of some trade agreement changes that have happened.
Oh, well, if you're in New Jersey, you got to grow your own.
We got Jersey tomatoes, sure. Hey, Jen, I mean, you are the expert. When someone asks me, like, hey, who bears the brunt of these tariffs? Is it the importer? Is it the packaged goods company? Is it the supermarket? You cover pretty much all of that, Jen. How do you explain it to people? Like, where those cost increases get born?
So I think there's a little bit of a distribution across the whole supply chain. And so everybody's taking a little bite of it. But that also includes consumers at the end of that chain. The problem with that, if a retailer is negotiating, they're negotiating with their packaged food counterparts, they're absorbing a little bit of cost, but ultimately the consumer has to pay a little bit more as well, because there's been so much inflation over the last couple of years that there's just no more bandwidth to absorb it and to protect and shield consumers from it. So it is inevitable that price increases and inflation is going to hit that end consumer. We just haven't really seen the full brunt of the tariff impact yet because of all of the delays and the implementation and things like that. We're really expecting to see that tick up in the second half.
For a company like Kraft Heinz, is there some sort of dividing line, or are they just kind of experimenting in terms of like eating the costs, the impact on the margins, and raising prices for consumers? How does that work?
They're really looking at it in a very targeted way. So it's more like category by category, or even sometimes product by product. Areas where you want to make sure that you have at least part of your product portfolio that preserves value for consumers. So that means not changing the pack size, that means not changing the price, but being selective and maybe increasing the price somewhere else in your portfolio to sort of offset that. So it's a big balancing act. One of the really great things that's come out in the last couple of years is that through AI and through big data, these companies have gotten much more sophisticated in how to maintain that balance. And so that's actually really helped in why we've seen some of the margin expansion that we've seen, at least the gross margin line, for some of these companies in the last couple of years.
Jen, 30 seconds left here. Are they going to split this company up? Weren't we talking to you about this a week or two ago?
Yeah, they're exploring strategic options. I think one of the big obstacles is that what was rumored out there in the press was that they were going to spin the bulk of their grocery business into some other entity. The problem is they've tried to sell a bunch of these brands already and have been unsuccessful in doing so. So the question is, can they do this in a way that bundles it, creates value for shareholders, and still gives them the returns that they think they deserve for the brands that they're looking to sell?
All right. I looked at the comp function, COMP, for Kraft Heinz. Last 5 years, compounded annual return for this stock. Wait for it. 1% per year. That's it.
Wow.
But on the flip side, they do pay a dividend yield of 5.5%. So you're getting all in about 6.5%. That's basically it for that part of the world. I don't know. And you pay a PE of 10 times earnings. That's kind of the story for a lot of that stuff in the consumer staples space. Jen Bartashis, one of the best out there on Wall Street. We've got her. She's a senior retail analyst for Bloomberg Intelligence. She's based down there in Princeton, talking about some Kraft Heinz. So we'll get the latest on those earnings. Coming up, Joel Levington, Bloomberg Intelligence Global Director of Credit Research. HOG, the bonds. Harley Davidson.
You're listening to Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio.
All right, John Tucker, Paul Sweeney, live here in our Bloomberg Interactive Broker studio, streaming live on YouTube. Let's talk Harley Davidson. Now, John, you know, I bought a ride recently.
You did not buy a Harley. Let's just make that clear.
I bought a Vespa Piaggio scooter, 50 cc's of raw power.
Oh, 50 cc's.
So when you're driving down the road and the guy on a Harley Davidson comes the other way, I wave. They don't wave back. I don't get the cool sign like you're a biker. But
you're not in the same
anyway,
way.
Joe Levington, he follows all the credit stuff for a lot of these industrial and transportation companies. He's a director of credit research for Bloomberg Intelligence. Harley Davidson stock is up 20% here. What happened?
Paul, you're on the Vespa. I would think you'd be coming. Are you coming out of your Bentley while you do that? Or?
Yeah, I'm Vespa on the Jersey Shore. You can find me any day.
That I believe. Yeah, the key for a Harley isn't really their earnings, which were really not great, but the potential, or not the potential, but a stake sale of their captive finance company, which came in at a much higher price than people were expecting. That's going to be used, or the proceeds are $1.25 billion, with the proceeds used for a mix of share purchases, paying down debt, and also for capital investment.
Okay, so when I go in to buy a Harley Davidson motorcycle at the dealership, I finance it through this part of Harley.
That's exactly
That's
right.
what they sold,
Yes.
or that's part of what they're selling. Who's buying it and why?
Sure, KKR and PIMCO are the buyers, each taking a 4.9% stake. And really, they're buying it because that business has been a very profitable business for many, many years. It actually should be more than 50% of Harley's overall profits. They actually make more money from the financing side than they do from manufacturing vehicles right now, which goes to the trouble that they're having on the manufacturing side.
Or let's talk about the manufacturing side. What's the motorcycle market like these days?
The motorcycle business isn't bad. I think the challenge with Harley is that it's kind of one of those melting ice cubes that sometimes you see in the media world that you would know well of. If you go back 10 years ago, the manufacturing side, its sales are down 13% over 10 years. Mm-hmm. But the real issue is that the margins have gone from 20%, so they're making 20 cents on the dollar 10 years ago. Now they make about 5 cents.
Wow.
And so it's really the profitability and the erosion and not really playing to their strengths.
Is that because they can't raise prices or their costs have gone up?
Well, I think it's really, they've kind of lost their way a little bit. They were talking today about their $6,000 motorcycle that they're excited about. And I know, it's the premium brand. It's that iconic image of a Harley. It's that V8 engine playing to the electrician or the plumber, the mechanic that has an $80,000 to $100,000 income and owns a Mustang. That's who they should be playing to in that 40 to 60-year-old age range. That's their customer. But they've tried to move out into different segments of the marketplace and have really gotten hurt. And eroded their image.
But I can't think of a more American-made product anywhere than Harley Davidson. So are they immune from tariffs? Does that give them an advantage versus some of these Japanese brands?
They're not immune from them, but they do have 25% of their business in Europe and another 25% in Asia.
Oh, okay.
But really, the U.S. is where they're big and where they dominate. They just haven't done a great job of marketing to that person and putting engineering into that customer.
Should I be more excited about a Harley Davidson stock hog or Harley Davidson bonds?
Well, I just look at the bonds, and I'm not that excited about the bonds. But what I will say for them is that they're going to remain investment grade after the sale, and they trade very wide to their ratings. And so, that is always an interesting combination that people look at.
What does that yield, or what?
Well, they have a variety of issues.
Well, yeah.
But I would say that in general, they trade about 20 to 30 basis points wide of where their ratings are. So what a credit rater thinks. And usually bonds trade to what the raters think.
How about, you also cover the auto sector. How's the credit of the auto industry out there? Because this whole tariff situation, the uncertainty associated with transition to EVs, I just say to myself, every time I look at some of the stocks, I can't find a scenario to own any of the stocks. How about the bonds?
Yeah, well, it's interesting because the bonds are a different world, right? All of the issues that you see in autos apply to pretty much everybody except Ferrari, right? Whether it's tariffs or the EV transition being slower or maybe not actually happening in the U.S., all of these challenges still exist. But the difference between an equity investor and a bond investor is that your typical bond is 3 years of maturity, right? Because it's largely tied to the captive finance company, right? The financing of the loans and leases behind an auto. And so it's a much shorter term way of thinking. Can I get my money back in 3 years supported by a vehicle which will have a residual value to it? It's a little different than saying like, hey, 10, 15 years out, what's my discounted cash flow? So it's a very investable side from the credit side, maybe not as much on the equity side.
Will they tell us more about the future? Can it serve as kind of a canary in the coal mine for a company looking at that end of it?
At the captive side?
Yeah.
Yeah, well, it's very short-term sighted, right? So
Okay.
you have to, for all of the treasurers and CFOs that are out there and CEOs, they're thinking long-term and where can I take my company? How can I grow it into something bigger and more meaningful? A bondholder just wants to get paid back.
That's right.
So
See, this is what I learned.
Different outlook.
Equity is soft. Debt is hard. You can always tell me to go, go.
Is that why we call it the smart money?
It is. It's smart money. They tend to be pessimists in general. Whereas the equity people were always glass half full. This is what could go right. For these guys, the whole world is what could go wrong. So anyway, Joe Levington, one of the best, Global Director of Research, Bloomberg Intelligence, covering all that autos, industrials, transportation, all that kind of stuff from the credit perspective. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Oracle. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts right now.
This is Bloomberg Intelligence with Paul Sweeney.
The real outperformance has been the U.S. corporate high yield. These are two big-time blue-chip companies. One person's chaos is another person's animal spirits.
Breaking market headlines and corporate news from across the globe.
Our view is that the economy is slowing down.
There is the possibility of a death spiral.
Both quantum computing and AI are going to power the future.
People are just buying everything with tech.
Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
All right, John Tucker, Paul Sweeney, live here in our Bloomberg Interactive Broker Studio. We are streaming live on YouTube as well. We are right smack in the middle of earnings, so we're going to have a lot of earnings coming up in the next hour. Michael Halen, Bloomberg Intelligence, Senior Restaurant and Food Service Analyst. We'll talk to him about Starbucks. They had some numbers out. I might even ask him about Wingstop, because now I'm all into the Wingstop, and we've got a bunch of Wingstops in Manhattan.
I had never heard of it.
I know. I just did the map thing. They're all around Manhattan, so I'm going to check that out. So that'll be good. Brian Whalen, CIO and Generalist PM at TCW. He's a fixed income dude. We get him from his office in LA, but I think he's in New York. I think he's going to be in studio. So he comes here when there's a heat wave. Nice move there. Craig Trudell, Bloomberg Global Autos editor. We're talking autos here. Mercedes, Porsche, they cut their forecast as U.S. tariffs really hammer on their profit margins. So we'll get the latest there. And then it is Fed Day. So the highlight of the day for me, Danielle DiMartino Booth, CEO and Chief Strategist at QI Research. She will be in our studio. You want to listen to this because she is wired in to the Fed. She used to be at the Dallas Fed, so she has some good insight there. So a lot coming up this hour. Let's kick it off. Charlie Pellet.
Thank you very much. Just looking at Wingstop shares that fall right now, surging by 25.2%. Starbucks, another stock we'll be talking about, trading lower now by 1.5%. The Dow, the S&P, Nasdaq, solidly in the green. Fed Wednesday here, decision 2 o'clock Wall Street time. Our coverage kicks off 1:30 here on Bloomberg. S&P up 10 right now. That is a gain of 0.2%. We've got the Dow up 13 now. Little changed, up under 0.1%, while the Nasdaq Composite Index up 78. That is a gain of just about 0.4%. 10-year 4.36%. The 2-year 3.89%. The 30-year ahead of the Fed meeting 4.90%. Gold down $23 the ounce, just above 3,300. Even now 33.02, down 0.7%. West Texas Intermediate crude up 0.8%, 69.78 a barrel, and Bitcoin up 1% at 118,615 on Bitcoin. 2 of the Mag 7 names, Microsoft and Meta Platforms, report today after the close of trading. Shweta Kujaria is Senior Research Analyst at Wolfe Research. She told us for Meta, her focus is going to be on CapEx.
We actually do expect Meta to even potentially raise their capex guide one more time to even above $72 billion for this year. And more importantly, investors will be looking for how they talk about elevated capex spend over the next few years.
Shweta Kujari of Wolf Research, Meta up 0.2%, Microsoft up by 0.1%, and of course Apple and Amazon both report tomorrow. Deal news: Palo Alto Networks buying CyberArk software in a cash and stock deal, valuing the Israeli cybersecurity company at about $25 billion. Palo Alto Networks down 5.5%, Cyber trading higher by 0.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hi, Charlie Pellet. Thank you so much. We appreciate it. John Tucker, Paul Sweeney live here in our Bloomberg Interactive Broker Studio. As Charlie was just mentioning, kind of got a mixed day out there in the marketplace. Lots of eco data, lots of earnings news. We got, again, the big tech names, as Charlie was mentioning after the close, so we'll pay close attention to that. Carol Masser, Tim Stenovic on Bloomberg Business Week. They'll have all that breaking news for you at the close. Let's take a look at some of the stocks on the move today. I'm Paul Sweeney alongside John Tucker. We're joined by Bloomberg's Isabel Lee. Isabel, what do you got?
We're starting with Mara Holdings, ticker is MARA. So the stock is rising more than 3%, and that's after the Bitcoin miner reported second quarter adjusted EBITDA that beat estimates, and that's amid really the big gain in crypto. It's now around Bitcoin rather. It's now around $118,000. We have Barclays saying that the company's improved energized hash rate is encouraging, and its growing Bitcoin holdings is also impressive. Piper Sandler notes that the company posted record quarterly revenue, and its large Bitcoin holdings is the reason for this because the stock obviously closely tracks the price of Bitcoin. Cantor Fitzgerald also says that the second quarter results was strong, and they see the third quarter results to be improving as Bitcoin rises higher.
It's a holding company that owns primarily Bitcoin?
It's a Bitcoin miner, so
it's a miner. Okay,
it still closely tracks Bitcoin, and hash rate to the uninitiated is basically just a measure of computational power in the blockchain network.
You got that, John?
You got that, John?
Yeah, I guess. Something tells me this is closely aligned with like the cost of energy and power.
Yes, very good. Yes, and over at J.P. Morgan, they increased their price target to $22. So lots of good news for Mara Holdings.
Can't wait to see that research. How they value this company. All right, what else you got for us?
Peloton.
Yes.
Ticker is PTON.
I understand this story.
Yes. Remember the pandemic days? Yeah, the stock is surging now almost 14% after UBS upgraded the stock to buy. They cite upside to full year 2026 EBITDA expectation, and they're saying it's supported by top line growth and further cost cuts. So they've raised their price target to $11 from $7.50. That's an 80% increase from the last close. And Peloton has 9 buys, 11 holds, and 1 sell rating. They report on August 7.
My significant other, she's got the bike, the treadmill. Now, we are in a relatively small townhouse on the Jersey Shore. These things are huge, and they're everywhere. But she's on them every single day. These people are fanatical. So my question to the company is, you got to generate more revenue out of these fanatical subscribers.
What's the growth area for this, though?
It used to be bikes, sell more bikes, and raise prices. And they still kind of raise prices, but they're not selling more bikes.
But you have to have subscriptions to the thing where the guy yells at you?
Yes.
Mm-hmm.
You pay extra.
You're right. They are loyalists. It's like if you love Peloton, you just tend to stick with it because you have a special instructor that you like. Yes,
all right,
definitely.
one more for us.
Humana, ticker is HUM. The stock is up around 5%, and that's after the health insurer boosted its adjusted profit and revenue forecast for the full year. So the new outlook is topping the average analyst estimate. So the management said that medical costs were in line with expectations, which hasn't been the case with rivals recently, and that it really benefited from the growth in its Medicare Advantage and pharmacy business. So the company also raised full year adjusted earnings guidance. And it's really actually a contrast from all of the health insurers that we've been hearing so far who've really noticed problems in Medicare Advantages. And all that. So really a bright star here.
All right. Very good. Isabel Lee, cross-asset reporter, Bloomberg News, joining us there. For more conversations like this, subscribe to our new Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Let's get back to the restaurant business. I know the restaurant business. I mean, I'm not sure about this whole
because you go to restaurants.
I'm in the restaurant almost every single day here, so I know what's going on out there. Michael Hanlon, he really knows what's going on with the restaurant business. He covers all the restaurants and the food services companies for Bloomberg Intelligence. Starbucks, big turnaround story. Mike, is it working?
There was some positive points that Brian Nickel hit on last night. The fact that their value perception scores are the best they've been in 2 years, and hourly turnover is down to 49%, which is actually phenomenal in the restaurant industry. Service times are improving, customer satisfaction's up, customer complaints are down. And so with a small beat on the U.S. same-store sales, and some of these positives he's pointing to, it's given bulls, some confidence that a turnaround in its biggest market is near.
What counts as innovation when you're basically selling coffee?
Well, yeah, restaurants tend to get some shade by calling, new menu items innovation. I'd say one of the more innovative products they're going to have is protein cold foam. Cold foam sales were up 23% in the quarter, so they're going to launch new protein cold foam, and that's part of a broader initiative to sell healthier items.
Protein
cold foam.
Cold foam.
Hey, do they have matcha? Isn't that what the kids are drinking?
Is it AI generated?
Is it AI?
So they do have matcha. I know they're going to try to implement some, debut some healthier food items as well, because typically their offerings are pretty unhealthy generally. They made an effort to remove dyes and high fructose corn syrup and stuff like that, and so they're going to continue to move towards healthier options.
Hey, Mike, let me ask one question here on tariffs. How do your companies, how are they exposed and how are they dealing with it? What are you hearing from your companies?
We're not hearing much because most of them don't have much exposure.
Okay.
Starbucks is one we're watching most closely because of coffee, right, and the impacts that tariffs can have on coffee prices. But Starbucks and all the other coffee chains that we follow are sourcing from many different countries. But the restaurant business, most of the companies, all of the companies are primarily sourcing their product in the countries that they're operating in, right? And so most companies, 90% plus of the items that they're sourcing are coming domestically.
All right, let's go wings, baby. Wingstop. Stock's up 24%. John Tucker and I have never been to Wingstop. We're going to the one on West 55th Street after the show here. What's going on at Wingstop?
Yeah, so Wingstop had a phenomenal year last year, and the stock is, had a bumpy time over the last, we'll call it 8, 9, 10 months, because investors knew that there was going to be a top and bottom line slowing this year. What happened today, the top line slowing was a lot less than expected. Net unit growth was better than expected. I mean, these stores are generating 70% cash on cash returns for their franchisees. People are lining up to open new stores. And the same store sales decline was a lot less than expected, just about 1%, lapping a plus 24 from last year. So less bad. Less bad equals, a lot of optimism around Wingstop, especially around the smart kitchen rollout. They cited, smart kitchen rollout.
There we go, with that AI theme again.
There we go, yeah. And so those kitchens are, are improving the service time significantly, making the jobs easier for the employees, and it's actually driving better traffic and sales 4 months after implementation.
All right, the West 55th Street Manhattan store. Better get ready. John Tucker and I are coming over. Michael Hanlon, thanks so much for joining us. Michael Hanlon covers all the restaurants for Bloomberg Intelligence. Our next guest, I always thought was a pretty smart dude. I mean, he went to Yale. He was at DLJ, and if you don't know what Donaldson, Lufkin, and Jen Red
but
is,
he comes to New York City during a heat wave, so we're calling that into question.
All the way from L.A. Brian Whalen joins us. He's the Chief Investment Officer and Generalist Portfolio Manager at TCW, based in L.A., but here in our Bloomberg Interactive Broker studio. Brian, what do you expect to hear from your Federal Reserve today, this afternoon?
Ooh, by the way, first of all, I came to the heat, but I avoided the tsunami.
Oh,
so not as dumb as you think, right?
Yeah,
there we go.
Good move.
I think it's going to be interesting. More likely than not, they're not going to move. That's expectations. I think the Fed did a pretty good job of messaging that the last few weeks. Although there's a couple dissenters, Bowman and Waller. They've come out pretty aggressively and said they think it is time to cut. However, most likely get nothing. I think it'll be interesting to hear about the messaging, though. I think, we got some information, some data in the last couple of days that I think confirms what Bowman and Waller have been saying, which is that, the economy is slowing down, the labor market is stalled. yes, there are some areas of the economy where you're seeing an increase in prices, but it's not driving or pushing inflation up broadly across the economy, nor inflation expectations.
Well, I put this question to Dennis Lockhart earlier. 3% GDP, I don't know that that's the environment in which you want to cut.
Here's what I would say. That the first and the second quarter were so distorted by trade, by gold. So I'd say this. The first quarter wasn't nearly as bad as that headline number would lead you to believe, and the second quarter wasn't nearly as good. I think what we like to look at, and a lot of people in the market, I think, like to look at is like final sales to domestic purchasers, and that's running kind of a low 1%. So I think, our best guess on the economy right now, it's running in a low 1%, but it's also trending down from first quarter to second quarter. So when you talk about Bowman and Waller and getting worried, and I'd point this out, I think they're remembering a year ago, like last June, the Fed came out to the world and they'd said, we're going to cut rates by 25 basis points by the end of the year. And then they got just a couple months of data, spooked them, and then they ended up cutting 100 basis points by the end of the year. And I think at this point, Waller and Bowman thinking the same thing, and that we're at this point now where a lot of the vol and the decline in confidence in the first part of the year due to tariffs and a lot of other things, it seems to be trickling into the hard data. And they don't want to get caught behind, particularly because at this point in time, we really haven't seen anything that would confirm what a lot of the people who have been spooked by inflation concerns, were the reason they're holding off on cutting.
Credit. I mean, I look at my IN Go function. If I were in a high yield, U.S. high yield, I'm making north of 5%. I can't remember the last time.
Yeah, it's the debate. Do you want to look at yields or do you want to look at spread?
Okay.
I think if you're a retail investor and you're thinking long
term. There's that spread term again, John. Joel
the bond nerds. We like to bust that out. we like to show off with the spread. So I'll say it this way. If you're buying on yield and you get a good diversified portfolio and maybe you've got a good bond manager to do it for you, you're probably going to be okay in the long term. But if, like asset managers, we're mark to market. Every day, every week, every month, every year, we are evaluated on how we're doing. And if spreads widen,